Hello friends, welcome to our class on personal finance. This is Tinir Barun Chatterjee, Managing Partner and Mentor, TCN Global and Economic Advisory Services LLP. Friends, today's subject is on small saving schemes and the opportunity of doubling money in post office small saving scheme. Before going to the second part of today's discussion, that is opportunity for doubling money, I'll just try to give you some background of the small saving scheme administered, managed and controlled by the Government of India. This small savings scheme is basically implemented under Government Savings Certificate Act 1959 and also Public Provident Fund Act 1968. Small savings scheme used to be managed, controlled by the post office. But today, many of the schemes are being handled by the nationalized banks, private banks, etc. Second part of our today's discussion is the objective of the small savings scheme. The objective is very simple: monitor and organize to collect the small savings of the households located in the villages, interior places, towns, cities, mobilize those resources through 1,50,000 post offices located throughout the country. As you know, in our country there are 780 districts, and in these districts there are around 1,50,000 post offices. The objective of this scheme is to basically collect the small savings made by the households, by the daily worker, by the farmers, by the unorganized employees, and also to channelize this fund for the development of the country. This fund is credited to National Small Savings Fund, and this fund is used by the central government and state governments for their development activities. So whenever you contribute or you deposit any money to small saving schemes administered by the post office or the banks, you could be sure that money is being used for the development of the country. Now, why people keep money in small saving schemes? First of all, they can join directly with the development activities of the country. Two, the interest rate is confirmed, fixed for a certain maturity period. And third most important thing, it is safe. Investment in post office is always safe because it is administered, controlled and managed by the central government and by the Ministry of Finance. In the Ministry of Finance, there is a department of economic affairs. So small savings schemes are managed by the economic affairs of the finance ministry of the central government or government of India. So it is safe. Money is saved, rate of interest is safe, and also it is being used directly in the development activities of both states and central. As I have said, there are around 1,50,000 post offices located all over India, and it is managed by 23 postal circles in 780 districts. The figures are very useful. 1,50,000 post offices, 23 circles, 780 districts. Now, how important small savings scheme is? Just to explain you that the collection net of disbursement during 2019 and 20, the figure was 2,80,276 crores throughout the country. This was the collections, net of payment. In 2021, it increased by 9.02%. Figure 3,05,564 crores. That is during COVID period. 21-22, it further increased by 17.56%. Amount 3,59,216 crores. And during the current financial year, that is 22-23, it is expected that the total net collection will be around 3,86,322, about 4 lakh crores. And these are used directly to meet the budgetary gap of both central government and state governments. Now, under these small savings schemes, there are 12 schemes. I will explain those 12 schemes, and we have written everything in this particular board. The first and most important scheme is Public Provident Fund. This Public Provident Fund was basically introduced for the purpose of covering provident fund facilities to the unorganized people who are not covered under the Employees Provident Fund scheme. But this scheme is available to everybody, whether he is an employee or a member of the Employees Provident Fund or not. Even you can have one membership with the Employees Provident Fund with your employer and another membership with this Public Provident Fund. Now you can have or open an account in banks or post offices. Interest rate is 7.1% per annum. This 7.1% per annum, mind that it is a tax-free income. Any interest on Public Provident Fund is fully exempted from the purview of taxations. So if you are in the tax category of 30%, then if you gross up this interest, it will be around 10% plus. So it is a very important scheme available to everybody, to the farmer, to the unemployed workers, to the disguised employees, everybody. Next, the Senior Citizen Savings Scheme, very attractive, and in Public Provident Fund there is a limit for deposit per annum. It is restricted to 1,50,000. You cannot deposit more than that because it is tax free. Whereas in case of senior citizen savings scheme, the interest rate is 7.4% and the interest is credited to your account on a quarterly basis and it is taxable. So you have to understand which one is not taxable and which one is taxable. Public Provident Fund is tax free, but other schemes, whatever I will tell you, these are all taxable. Then post office time deposits, savings deposits. Next is very important is the monthly income account. We call it MIS. Every month you will get interest as applicable to you in respect of your deposits, and there is a maximum amount of deposits. It is rupees 4,50,000 for you as a whole, not per annum. Whereas in case of PPA, 1,50,000 deposit per annum. Every year you can deposit 1,50,000. So monthly income is basically helpful for the pensioners. Those who are retired employees, they can deposit, but as I have said, per individual deposit will be restricted to 4,50,000. So if you have a spouse, then you can deposit 9 lakhs rupees. Interest rate, as I have already explained, it is 6.6%. Then as you know, National Savings Certificate, NSC, there is no limit. Interest rate is 6.8%. Then 5-year time deposits, rate is 6.7%. Then 5-year recurring deposit 5.8%. And Sukanya Samriddhi Yojana, it is basically for girl children, and rate is 7.6%. These are the schemes are available. Regarding the interest rate is concerned, I just want to tell you, now post offices like banks, they have taken a very floating interest rates concept, which means every quarter and they will inform you what is the interest rate applicable for the next quarter. Like the current quarter, July, August, September, interest rate has already been notified and we have mentioned here. But what interest rate will be there for October, November, December, that will be announced on 8 September 22 or 1st October 22. So therefore, now the interest rate is floating almost in all cases. But the question is that suppose you have made a MIS at 6.6% today. And in the month I am not married. So this 6.6% will be fixed and it will continue till the maturity. Even if the interest rate is increased to say 6.8% or if it is reduced to 6.4%, these interest rate will not change. Those who are going to make a fresh deposits from October, the new rate will apply. So this is very, very important. So today, like banks, they also declare interest from time to time depending on the inflation, RBI, interest rate and many other factors. And in the case of post office, the Ministry of Economic Affairs under Ministry of Finance will decide what will be the rate of interest for the next quarter starting from October and ending in December. Friends, this is an overall view of the small saving schemes. Once again, I will tell you, this scheme is extremely safe. Rate of interest is guaranteed by the Government of India and there is no scope for default, bankruptcy or anything which we face in other private cases. Now I have to come to the main issue, that is how we could double our investments through small saving schemes. Friends, I have explained all the schemes excepting one, and that is known as Kisan Vikas Patra. Kisan Vikas Patra, from the name you will probably feel that it is only for the Kishans, our beloved farmers. It is not the case. Anybody can invest money and there is no upper limit. Like I have said, there is an upper limit in public provident fund 1,50,000. Then senior citizen 15 lakhs. Monthly income 4,50,000. But in case of Kisan Vikas Patra, there is no limit. So you can invest any higher amount, and with 6.9% interest per annum, after a period of 124 months, that is 10 years, 4 months, your deposit will be doubled. It means that if you deposit today of 1 lakh rupees, you will get 2 lakh rupees after a period of 124 months. So how this 1 lakh is becoming 2 lakh? Because of compounded interest. Interest is being compounded at a rate of 6.9%. And after a period of 124 months, you will find the principal has become doubled. But this scheme is available only for Kisan Vikas Patra. As I have already said that there is no upper limit. Even if you want, you can deposit 5 lakhs, 10 lakhs, 20 lakhs, whatever it may be. There is no upper limit. Your advantage is that this 6.9% rate will be applicable and it is guaranteed for a period of 124 months. But if you put this money in any other deposits, from October onwards, the rate will change. It may increase, it may decrease. So you are guaranteeing the rate of interest for the next 124 months, and who is guaranteeing? Government of India. There is no question of renewal, maturity, then renewal in the next 10 years. So once you put the money, you can keep quiet for a period of 124 months. Money will automatically rotate and it will compound. This is a big advantage. Friends, I have told you that you can deposit any money. Yes, that is the law. There is no upper limit. But you must know that any deposit in term deposit, whether it is a fixed deposit or any deposit under this KVC, exceeding 10 lakhs in a year, 10 lakhs and above in a year, will be reported to the income tax department. Annual information statement. So, you must ensure that the payments are made from the banks and the bank reference are disclosed in the income tax return, so that even if you deposit more than 10 lakhs, on an inquiry of the Department of Income Tax, you can show that this money has been invested out of your earnings, out of your income which have already been taxed. This is the only rider which I would like to tell you. Any deposit in a fixed deposits, term deposits, or with the post office, 10 lakhs and above will be reported to the income tax department. Who will report? In this case, banks or post office, who are getting this money. So, I have explained two subjects. One, I have explained what is small savings scheme, why it is so much popular in India, why it is guaranteed, safe haven, what are the various rates of interest, and in the last part I have explained how you can double your money, but you have to wait for 124 months. Friends, we are coming out with various videos and it is not confined on only taxation. Friends, we are coming out with many videos of diverse type in various areas like foreign trade, GST, income tax, insurance, personal finance, corporate laws, etc. We will be uploading around 100 to 120 videos on various commercial and business affairs. Those who are running business, those who are corporate citizens, those who are managing the business, those who are professionals, advocates, students, they will be highly benefited from this video. Probably they may not like to refer further references. Please like our video, please share our video, and please subscribe our video. Unless and until you subscribe, we will not get the strength to come out with contemporary issues in a video format. Please support us. Please support by subscribing, liking, and also sharing. Thank you very much for your patient hearing. If you have any query, please do not hesitate to write a small mail to us. My mail reference tb.chatterjee@yahoo.co.in. I will again tell you TB, T for Tata, B for Bombay, tb.chatterjee, CHATTERJEE @yahoo.co.in. My telephone number 93310422424 93310422424. Thank you very much for your patient hearing.